Inflation will be a consequence of this and this. Have you been buying stocks on green days thinking, yes, everything's over, it's okay, and the next day the whole market is red? To remain alive in the stock market, we need to understand the big picture. Now, inflation is the enemy number one. So, is this the end of the free fall? Why inflation is filling the stock market with fear? And if it comes, how will this affect your stocks? So in 5 minutes, I'll tell you the important things about inflation and how can this affect the stocks you own. I'll leave the chapters below in case you want to move around. So let's talk about that. When everything is green, we love to see our portfolio, the market, everything is nice. But if you really think about it, the times where people make more money is after a market crash or market correction, buying the dips. So now it's the time to watch the market during times of fear and uncertainty. The charts, the price action, the news, and focus on the ones on inflation. Because yes, you can focus on earnings, acquisitions, but if the big force, fear of inflation, keeps pushing down, a great revenue and beating expectations might not be enough to drive the price up for too long. It seems like a cliche to quote Warren Buffett, but honestly, this is a phrase to tattoo in our brains. Be greedy when others are fearful, and fearful when others are greedy. Learning from the master. Thank you, Mr. Buffett, but how can we know when the fear is over? By understanding the big picture. If you want to chase green days in the stock market, you might make some money, but at the end of the day, there's a high probability that you'll fall into the 90% of people who loses money in the stock market. So with this said, let's talk about inflation. Long story short, inflation is how much value your money loses over time. It's the rise in the cost of goods and services. You can track inflation by following the CPI. This tracks the price of common goods like food, clothing, and so on. There are two main kinds of inflation. A good example of demand pull is this. Money's been printed. Yes, I can buy more stuff. Like this guy, many people can buy more stuff. But if the supply doesn't meet the demand, what happens? I have 10 iPhones to sell and I have 100 people outside. So what can I do? I'm gonna raise the price. Inflation! A good example of cost push is this. Suppose the cost of making those iPhones increases. The battery, the screen, the chips, the camera. So the iPhone guy says, I'm gonna raise the price again. Inflation! So you have the one where the supply cannot meet the demand and the other where the cost of making those products increases. And we have to pay it. So keep an eye on the supply-demand relationship and on the margins of the companies in your portfolio. The Fed and the central banks have the main task of stabilizing the economy. One of the ways they can do this is by controlling the rates at which banks borrow money from larger banks and other entities. So banks borrow money to lend it, companies borrow money to grow, and consumers like us borrow money to buy stuff. That's the magic movement of the money in the economy. To reactivate the economy, the government did two main things. They lowered the interest rates. Now banks, companies, and consumers can borrow money and pay less. And with low interest rates, keeping money in the bank is not very profitable. Many people decided to invest it, and this didn't push the economy up in a healthy way by rolling around from banks to companies to consumers and from consumers to companies to banks. So a lot of stocks reached very high prices just for the hype. Stimulus checks. By creating more money, the governments encouraged spending. But as more money floods the economy, print, the lower the value of the currency. It's the basics of supply and demand. Too much of something and it becomes cheap. How can inflation be controlled? One of the ways is by increasing interest rates. Why would a government do something like that? Since borrowing money is more expensive, the money supply is lowered, and in time, balance between supply and demand start moving into healthy levels. I want to know how inflation is gonna affect my stocks. Due to globalization, technology, and the booming work from home trend, some companies can reduce costs significantly. Smart companies are doing it. But the fact that higher interest rates causes borrowing money to be more expensive, the companies with higher debt become more risky because they can fall in the short term. Honestly, I'm not gonna start buying bonds or index funds. I like risk with a potential high return. But that's just me. I'm not a financial advisor. I'm trying to follow Mr. Buffett's quote and I'm sticking to my growth and value stocks, building my positions for the long term, buying the dips. Because the stock market will turn around. And I might have in my portfolio the next Tesla stock. See you next time.
This joint right here